If you had $1 from 1967, the very first year Singapore had its own currency, and you compared it to other countries' money today, you'd be shocked. While many currencies have lost value over the decades, the Singapore dollar, SGD, has stood tall, even getting stronger against some of the world's biggest currencies. But how does a tiny country, with no oil fields, no gold mines, and barely any land, manage to keep its money so powerful? The answer is not luck. It's strategy, discipline, and a little bit of genius. Let's break it down. 1. A currency born out of survival. When Singapore became independent in 1965, it was suddenly on its own, no longer sharing resources, administration, or a currency with Malaysia. At the time, the young nation was vulnerable. It had no natural resources, limited industry, and was still recovering from political and social unrest. Until then, Singapore used the Malaya and British Borneo dollar. But this arrangement couldn't last. A sovereign nation needs a sovereign currency, not just for day-to-day trade, but as a statement of identity and control over its economic future. By 1967, Singapore introduced the Singapore dollar, SGD, printed under its own authority. This was not a casual decision, it was an act of survival. Without a strong, trusted currency, foreign investors would hesitate, imports would become more expensive, and inflation could spiral. The stakes were enormous. If the SGD lost value early on, Singapore's fragile economy might collapse before it had a chance to grow. Prime Minister Lee Kuan Yew and his team understood this, so they backed the new currency with foreign reserves and strict monetary rules to inspire global confidence. The SGD wasn't just a piece of paper, it was a declaration to the world. Singapore would stand on its own feet, manage its own finances, and protect the value of its money. That early determination laid the foundation for the currency's remarkable stability today, turning it from a survival tool into one of Asia's most respected currencies. 2. No printing money for fun. In its early years, Singapore understood a harsh economic truth. Once a country starts printing money without restraint, trust in its currency evaporates. Many nations have fallen into this trap, using the printing press to fund projects, pay debts, or cover budget shortfalls, only to see prices soar and the value of their money collapse. Singapore's leaders took a radically disciplined approach. They adopted a currency board system, which meant that every Singapore dollar issued had to be fully backed by equivalent foreign assets, such as gold or stable foreign currencies. In simple terms, if all the SGD in circulation were brought back to the central bank, the Monetary Authority of Singapore could instantly exchange it for its full value in other trusted currencies. This rule removed the temptation to print for convenience and ensured that the supply of money grew only when Singapore's reserves grew. It also reassured foreign investors and trading partners that the SGD was not just paper with ink, but a claim on real, tangible value. The policy worked like a seal of authenticity, giving Singapore's currency a credibility that many larger economies struggled to match. From the very start, the message was clear. In Singapore, money isn't a political toy. It's a promise, and promises are kept. This reputation for monetary honesty became one of the pillars of the Singapore dollar's long-term strength. Number 3. The Mass, Singapore's money bodyguard. By the early 1970s, Singapore had proven it could keep its currency stable, but the world of finance was becoming more complex. Global trade was expanding, oil shocks were rattling economies, and foreign exchange markets were getting volatile. To protect the Singapore dollar in this unpredictable environment, the government established the Monetary Authority of Singapore, MAS, in 1971. Think of MS as the currency's bodyguard, alert, disciplined, and always ready to step in. But unlike many central banks, MAS doesn't just adjust interest rates and hope for the best. It runs a full surveillance system on the economy, monitoring inflation trends, trade balances, capital flows, and currency movements in real time. Its most distinctive weapon is exchange rate management. Instead of pegging the SGD to just one currency like the US dollar, MAS quietly manages it against a secret basket of currencies from Singapore's key trading partners. This means the SGD stays competitive for exports while keeping import prices under control. If the SGD rises too high, MAS sells the currency to push it down and protect exporters. If it falls too low, MAS buys it back to maintain purchasing power. This proactive strategy stops wild swings and keeps the currency's value predictable. Exactly what investors and businesses want. Over the decades, MAS has earned a global reputation for precision and integrity, turning the Singapore dollar into one of the most stable and trusted currencies in the world. 4. A strong economy, a strong dollar. When Singapore became independent, it had no oil, no minerals, and very little land. The only resource it could rely on was its people, and the determination to become indispensable to the world economy. Over the next few decades, Singapore transformed itself into an economic powerhouse, and that transformation became the backbone of the Singapore dollar's strength. Its location along the Strait of Malacca, one of the busiest shipping lanes on Earth, made it the perfect global trade hub. The Port of Singapore grew into one of the world's largest and most efficient, handling goods from Asia, Europe, and the Americas. This constant flow of trade meant a steady stream of foreign currency entering the country. At the same time, Singapore became a financial center, attracting global banks, investment firms, and multinational corporations. Businesses trust Singapore's political stability, strict anti-corruption laws, and reliable courts, all of which create a safe home for money. Rather than depend on low-cost labor, Singapore invested heavily in high-tech industries like semiconductors, biomedical research, and advanced manufacturing. These sectors generate high-value exports and keep the economy competitive. Tourism and services added another layer, with millions visiting each year for shopping, conventions, and attractions. All spending in foreign currencies. Together, these sectors built an economy so strong that investors, traders, and businesses naturally want to hold Singapore dollars. And when global demand for a currency rises, its value doesn't just hold, it climbs. 5. Low inflation, always. In many countries, inflation is like a hidden tax. Your money buys less and less over time. But Singapore has built a reputation for keeping this silent thief under control. From the beginning, policymakers understood that if prices rose too quickly, it would erode public trust in the Singapore dollar and make it harder for ordinary citizens to afford basic needs. One of the key strategies is diversified imports. Because Singapore imports almost all its food, fuel, and raw materials, it makes sure not to rely too heavily on any single country. This way, if prices spike in one market, it can source from another, keeping costs stable. The government also uses public housing policies to manage one of the biggest drivers of inflation, real estate. With over 80% of Singaporeans living in Affordable Housing Development Board (HDB) flats, property prices remain within reach for most citizens, preventing housing bubbles from destabilizing the economy. Wage management is another tool. Through close coordination between employers, unions, and the government, wage growth is encouraged to match productivity, ensuring that pay rises don't cause runaway price increases. And when inflationary pressure does build, the Monetary Authority of Singapore, MAS, steps in. By adjusting the exchange rate to make imports cheaper, it cools price rises before they spiral. This disciplined approach has kept inflation consistently low for decades, making the SGD a currency people can rely on, one that doesn't quietly shrink in value while it sits in your wallet. Number 6. No debt addiction. Debt can be a useful tool, but for many countries it becomes a dangerous habit. When governments borrow excessively to cover budget gaps or fund short-term promises, they risk creating doubt about their ability to repay. That doubt can weaken a currency, as investors demand higher returns or simply move their money elsewhere. Singapore took a very different path. It maintains one of the lowest debt-to-GDP ratios in the world, and the debt it does issue is carefully structured. Instead of borrowing to pay for everyday expenses, Singapore issues bonds mainly to create a safe investment market and to fund long-term infrastructure projects that will generate economic returns. Even more impressively, the country's net financial position is positive, meaning its assets, including massive foreign reserves and investments through sovereign wealth funds like Temasek Holdings and GIC, far exceed its liabilities. In plain terms, Singapore owes money, but it also owns far more than it owes. This fiscal discipline sends a powerful signal to global markets. Singapore is not a risky borrower. Investors know it can always pay its debts, which keeps confidence in the Singapore dollar high. It's like lending to a friend who not only has a full savings account, but also a well-paying job and zero bad habits. You don't worry about getting your money back, and that trust is a key reason the SGD remains strong and respected worldwide. 7. Massive foreign reserves. Foreign reserves are like a nation's emergency shield. The bigger they are, the safer the currency feels. Singapore has built one of the most impressive shields in the world. Despite its small size, the country holds hundreds of billions of dollars in reserves, making it one of the top per capita reserve holders anywhere on Earth. This didn't happen by accident. For decades, Singapore has run trade surpluses, selling more goods and services to the world than it buys. The extra foreign currency earned from these surpluses is saved and invested rather than spent recklessly. Two of the most important players here are GIC, Government of Singapore Investment Corporation, and Temasek Holdings. These sovereign wealth funds invest globally in stocks, bonds, real estate, infrastructure, and even tech startups, growing the nation's wealth across multiple sectors and regions. The result? Singapore doesn't just have reserves sitting in a vault, it has an actively managed, diversified portfolio that can be tapped in emergencies. For investors, this is hugely reassuring. If the Singapore dollar ever comes under pressure, during a financial meltdown, currency speculation attack, or global crisis like the COVID-19 pandemic, the Monetary Authority of Singapore, MAS, can draw on these reserves to stabilize the currency. It's like having a family with a massive savings account, multiple income streams, and no history of wasting money. You know they'll weather any storm, and that's exactly why the world trusts the SGD to stay strong. 8. Safe haven status. In the unpredictable world of global finance, some countries are seen as safe havens, places where wealth can be stored without fear of sudden collapse. Singapore has earned this reputation over decades, becoming one of the most trusted financial sanctuaries on the planet. Its appeal starts with political stability. Singapore has a consistent, well-functioning government, free from the kind of sharp policy swings or political chaos that can unsettle investors. Decisions are made with long-term national interest in mind, not short-term political gain. Then there's clean governance. Transparency International consistently ranks Singapore among the least corrupt countries in the world. Laws are enforced strictly, contracts are honored, and bribery is rare, all of which make it a safe place to do business. On top of that, Singapore's economic resilience is unmatched. It has weathered global recessions, regional crises, and pandemics with speed and efficiency, often emerging stronger than before. Because of these factors, when the world experiences shocks, whether it's a war, a financial meltdown, or political unrest elsewhere, global investors often move their money into Singaporean assets. This surge in demand for the Singapore dollar naturally pushes its value upward, or keeps it stable, even while other currencies may be falling. In short, Singapore is like a high-security vault in a stormy world, solid, reliable, and always in demand. And that safe haven glow is a big reason why the SGD stands tall on the world stage. Number 9. Smart exchange rate policy. While many countries allow their currencies to be tossed around by the forces of the global market, Singapore takes a far more hands-on approach. The Monetary Authority of Singapore, MAS, operates a unique managed float system, a strategy designed to keep the Singapore dollar, SGD, steady and predictable. Instead of pegging the SGD to just one currency, MAS tracks it against a secret basket of major currencies from Singapore's key trading partners. The exact mix and weightings are not publicly disclosed, which makes it harder for currency speculators to game the system. This basket approach smooths out the effects of sharp movements in any single currency. For example, if the US dollar suddenly weakens or the euro strengthens, the SGD won't swing dramatically because it's balanced against multiple currencies at once. MAS also sets a policy band, an invisible range in which the SGD is allowed to move. If the currency threatens to break out of that range, MAS steps in, buying or selling SGD in large amounts to steer it back on course. This is like driving with lane assist on. The car currency can move a little left or right, but it won't veer off into dangerous territory. The result? Businesses, traders, and investors can plan with confidence, knowing that the Singapore dollar won't suddenly crash or spike without reason, a stability that keeps it attractive to the global market year after year. 10. Trust built over decades. Trust is the invisible backbone of any currency. Without it, even beautifully printed banknotes are just pieces of paper. Singapore's leaders understood this from day one and treated the Singapore dollar, SGD, not merely as money, but as a promise. A promise that the nation would guard its value with discipline and foresight. Over the decades, Singapore avoided the common traps that erode trust. There was no reckless spending to buy political favor, no uncontrolled printing of money to cover deficits, and no sudden, desperate currency devaluations to boost exports. Every policy was crafted with long-term stability in mind, even if it meant slower short-term gains. Inflation was kept low, budgets were balanced, and reserves were built up. The government also communicated clearly and consistently with investors and citizens, creating an environment where there were no shocking policy U-turns or financial surprises. This steady reliability has paid off. Today, the SGD is one of Asia's most respected currencies, considered by many to be on par with or even more stable than the Japanese yen. In times of uncertainty, investors are confident that Singapore will act rationally and decisively to protect its currency. Trust like this can't be bought or faked. It's earned, year after year, by making smart choices and proving to the world that the Singapore dollar is more than money. It's a symbol of stability, honesty, and resilience. 11. The digital future of the SGD. Singapore has never been a country to stand still, especially when it comes to money. As the world moves toward digital payments and blockchain technology, Singapore is preparing the Singapore dollar, SGD, for its next evolution, the era of central bank digital currency, CBDC. A CBDC is essentially a fully digital version of a country's official currency, issued and backed by its central bank. Unlike cryptocurrencies such as Bitcoin, a digital SGD would be stable, regulated, and universally accepted, just like cash, but without the need for physical notes or coins. The Monetary Authority of Singapore, MAS, is already running pilot projects to explore how a digital SGD could work for everyday transactions, cross-border payments, and even large-scale financial settlements. The goal is to make transactions faster, cheaper, and more secure, reducing reliance on intermediaries like payment processors. Beyond convenience, a digital SGD could also strengthen trust. Digital currencies can be tracked and verified instantly, reducing the risks of fraud and money laundering. For international trade, it could cement Singapore's role as a global financial hub, offering a currency that's both high-tech and rock-solid. If implemented carefully, this move could future-proof the Singapore dollar, ensuring it remains not just strong in the present, but also ready to compete in the digital economy for decades to come. It's the same principle Singapore has followed for over 50 years. Adapt early, lead confidently, and never let the currency fall behind. 12. The lesson for the world. The strength of the Singapore dollar isn't some lucky accident or hidden trick. It's the result of decades of discipline and foresight. Singapore's leaders treated economic policy like a long game, where every move had to serve stability, trust, and growth. Disciplined spending meant the government never lived beyond its means, avoiding the debt traps that sink other nations. Smart policies ensured the currency was always backed by real value, managed with precision by the Monetary Authority of Singapore. A strong, diversified economy kept demand for the SGD high, while massive savings and reserves gave it the power to weather any storm. By keeping inflation low and maintaining political stability, Singapore built a reputation for reliability. Investors know the rules won't change overnight. Citizens know their money won't lose value in their pockets. And the world knows Singapore will defend its currency with everything it has. It's a powerful reminder. You don't need vast natural resources to have a strong currency. You need the right strategy and the discipline to stick to it. Next time you hold a Singapore dollar, whether in crisp polymer or as a digital balance, remember the story it tells. A story of a small island with big ambitions. A story of trust earned, not demanded. A story of resilience in a world of economic uncertainty. The Singapore dollar doesn't just survive, it thrives and inspires.